Paul, good to have you. Towards the end of his speech, he also said, we got to keep at it until the job is done. You hear what you wanted to hear?
Yeah, I'm going to be joining the amen chorus, I think, of your other commentators. I think he did a really good job of laying out both the strategy and the tactics of where they're going forward. They're going to move into restrictive territory. As they do that, they will likely slow the pace of tightening at some juncture, which could be September, but he left that open. So they're going to get to restrictive. They're going to slow the pace as they get to the terminal level. And then most important, they're going to maintain the terminal level for an extended period to bear down on inflation. So I look at that as the hat trick of essentially what he was laying out is, and it's probably best summarized by, higher for longer, as Steve has been pounding the table about.
Well, a lot of market participants trying to figure out what that terminal level is and how long they're going to stay there. You want to give anybody any guesses?
I think it'll be, 3.5 to 4, and I would lean towards 4 as opposed to 3, particularly if they pull back to 50 versus 75 in September. Then I think it would be a longer process to higher peak. So I'm thinking in terms of 3.5 to 4, leaning towards 4, and I would think in terms of at least 6 to 12 months, which is where your biggest disagreement is with where market forward pricing is. So right now I'm thinking in terms of 4 or 6 to 12 months.
All right, that pretty much even at the shorter end of that takes us probably through most of next year, Paul. And I wonder if another way to perhaps characterize the message. Now, Chair Powell's been circumspect about the notion of a potential soft landing for months right now. But could you take that speech and say that even any kind of a soft landing isn't explicitly even the goal anymore?
I think it's still the goal. I don't think they want to have a recession. They're not aspiring to a recession, and they're looking at that as a tail risk event. So I think they're still trying to achieve a softish landing, but he didn't really pound the table about that today, and I think wisely so, because he wanted to communicate, using the word pain, that there's going to be some pain on Main Street associated with this. So I think a soft landing is still doable, but he didn't want to ring a bell on soft landing today. He had other sort of things he wanted to put markers down, notably the a higher for longer marker.
And just to be clear, Paul, why do you believe it's wise for the Fed to be communicating to the public that they should expect some pain here?
The Fed is a public institution chartered by Congress with a mandate from Congress. So I think it's eminently reasonable that Chair Powell would be speaking to the public. And most of the action in the media associated with Fed policy is related to what we're talking about in markets and so forth. And I think it's important for the chair to speak directly to the public, at times telling them that he feels what's going on in the economy and recognizes that he needs to do what he needs to do, and it's going to hurt a bit. So I think it's important that the chair speak to Main Street, not just to Wall Street all the time.
Yeah. All right. Well, it's hurting Wall Street a little bit, too, now. At least those were long stocks. Paul, thank you.
My pleasure.